All right, welcome to my daily review. You're looking at a daily chart of the Nasdaq from 2017. This is September 2017, and I can fast forward a little further till we get to the end of the year. But I just wanted to show you this because this market is starting to remind me of 2017, where it was really easy to hold stocks long. And you could see why here. Once the year started, January, if I can move this here, this is January right here. It started its uptrend, it was in a power trend already, and it just pulled back to the 50 a couple of times, the whole year, the whole darn year. And we're halfway through this year, more than halfway through this year, and it's doing the same darn thing. You could see if I just keep going, this is just a real easy hold. And if the Nasdaq pulls back to the 50, well, that's not the worst thing in the world that ever happened. And I'm getting to December 31st and January of 2018. But that's the year 2017. I know people hate it when I do this, but history doesn't repeat, but it often rhymes, as somebody way smarter than me once said. And so here we are. This is January here. It did pull back to the 50 once already, and now it's just climbed higher. What is today, like 0.8% above the 21? So it pulls back to the 21, no big deal. It tried to rally today, but you can use whatever excuse you want, profit taking or higher yields, whatever. It's just squatting on the 10, which is not bad. And if it pulls back to the 21, that's less than 1%, 0.8%. The 50 is rising, but you always have to keep your eye on the 50 because, as you saw in 2017, even though it was really easy to hold stocks that year, it did pull back to the 50 several times. Anyway, that's my history lesson for today, and I'm sticking to it. All right, a couple of sectors. I'm going to go through a couple sectors and take a random walk today. This is a Royal Caribbean Group. This is a gapped higher 8% on a 246 above average daily volume. That's a nice bar there. It closed at 62% of its daily range, so something to watch. Not a real powerful earnings gap, but a nice move if you're long. And just keeping my eye on these cruise line stocks, which had a nice day today. They're turning in nice reports, and people have been booking their trips and taking the cruises and not worrying about COVID anymore. So that's good. Get out and enjoy life. This is Carnival, and this one popped 3% today, so another nice move. And this is a Norwegian Cruise Line, another cruise. You can see the blue dot there with the powerful volume bar up, nearly 3% on above average volume. So a good day for the cruise lines. And so I just want to acknowledge that, how I've talked about the home builders, the steel stocks, the materials, just a lot of different, the banks, finances, just a lot of different areas are participating in this rally. So that is a good thing. It's very healthy longer term. And I'm going to show you the chemical space, which I normally don't, but Sherwin-Williams, you can see this nice, really symmetrical type cup and handle pattern. And this thing broke out on earnings earlier in the week, and it's holding its gains nicely. This Sherwin-Williams is chemical paint sector. RPM is another one in that sector. Blasted higher on earnings beat, and followed through very nicely. Yeah, that's a nice 11% move on Wednesday, followed through today. That's very nice. So the chemicals are where it's at. This is Dow, a little bigger company, 38 billion market cap, where RPM is like around 10. Anyway, Dow, you can see this double bottom base here and setting up near a buy point. I would get in early there around before 55, but it looks good if you want to own something like that. I don't, but some people do. Anyway, I just wanted to point that out. There's more and more sectors that are participating in this rally. It's not just the magnificent seven stocks, which there's such a lazy narrative, it drives me crazy. Anyway, I'm going to get back to what I know, and that's semiconductors. And NVIDIA is forming this ascending base here. Might need a little more time. It's got that 480.88 high from a couple weeks back. What day was that? July 14th. So that would be your standard, pivot. But yeah, I'm not going to wait. In fact, I bought some this week. I added. Problem with adding, is for me, it raises my cost basis, and I don't like doing that. Some traders tell me like, it's just profit, take the darn profit. So it doesn't matter where you buy it as long as you make profit. But anyway, my first buy was a lot lower, so I don't like adding at higher prices. You can see it's up in after hours, and that's due to Intel's earnings report. But I'm going to get to a couple others because there's just these semiconductors are reporting strong earnings and getting nice bounces. This is Lam Research up more than 9% today with heavy volume. And that's a nice move. Closing range is 67%. So that's a gap higher that I will pay attention to. Applied Materials is another one of these up 5%. You know, these are nice moves. And like I said, you know, I don't know what the answer was for the weakness in the market today, but these stocks are strong. So that's all we care about, right? We only care about our stocks. And this is a KLA 10 core. This one was up 5% today with good volume. And these semiconductors are just, you know, doing really, really well. This is, you got to look at the weekly chart on this one. ST Micro, because this is a really beautiful cup with handle pattern. It's starting to push away from its base here. I had this on our watch list recently. I took it off because you can see this scattered movement. So the handle even looks like a cup with pattern. Anyway, that's enough with that. No, I lied. I'm going to include Supermicro in this group because it's one of the stronger stocks, and it made a new high today. I mean, if you look at the weekly chart, you can see the, I point this out probably too often. You're probably sick of this. But anyway, the high tide flag pattern with the 270, the high and the flag, and it just blasted right through that. I thought I was going to have trouble with 300, but it shows you what I know. It looks like it wants higher prices, and they have earnings on August 8th, so we'll hear more from them in a couple of weeks here. Okay, so what else do I have? Oh, yeah, I'm going to look at some of the stocks we've had on our watch list recently, some winners and losers. You know, I try to be balanced, and, you know, not everything works out, and we have losers too, but we try to do well with our stock selection. This is Old Dominion Freight. And definitely popped higher here and then pulled back a little bit today with general market weakness, 2%, but that's a nice move. I forget what the buy point was there, but you could see that it has made a nice move. So congrats to the longs there. I'd be taking profits. Caesars Entertainment is another one on our watch list. This one is just pushing away from its base. Had this bearish engulfing candle today down 2%, and that's why we take profits. But a nice move. Higher for Caesar. RIVN is another one that was kind of forming that shelf, pushing away. You can see it's finding support here. It's 10 EMA, and as long as it does that, it's above the 10. That's great. It pulled back today. It ran higher, made a high, and then pulled back with the general market weakness, but it looks still pretty good. I also want to point out a couple of losers here, and this is they didn't even have earnings. This is kind of a faulty cup. You know, I talked about these ones where the right side goes straight up like this. You got to be aware of these. These things usually need time. And this one fell with Microsoft earnings, that there was weakness in certain areas. And so it doesn't even have to be, you know, your stock's earnings. It could be blindsided by a company that it's connected with. So that's called pin action, and that's bad pin action for Arista Networks. The other one was SDGR, Schrodinger, which pulled back below its 21. They have earnings next Wednesday on August 2nd, so it's something that I'm interested in, but definitely a loser for, you know, from where we had it for our buy point. But I'm still watching this one because, you know, I think it's coming out of this stage 1 base here and into stage 2, this ascending area. It is 19% below its 52-week high, but it's something to watch. 19% is not the end of the world. I do like them 15% or less, but anyway, we can't always get what we want. I'm going to take a look at some earnings gaps that I'm monitoring here. This is the automaker XPEV, XPeng, and this one gapped higher on Wednesday and had an inside day today, though still up 4% on an inside day, which is a nice move. Definitely one to watch. And to the VICR, go the spoils. VICR, I got to be honest, I don't know what this thing does, but it had a massive move on Wednesday and followed through today. So it's another stock that I have to monitor. That is not going to be ignored. 57% move. Yeah, that's a nice move with a 900% above average daily volume. Then followed it up with a 1.5% move today in a pretty weak tape. So that thing is flexing. CLS, I wanted to show you this one because this is a faulty. Any power earnings gap, that closes at the daily range, 10%, it's a weak bar. So I'm still going to monitor this, but I was talking to a trader friend of mine, and I just didn't like first of all, it's pretty thin, and it's just I didn't like the action at all today. So when it gapped above 20, it just sold right off down to 18. That's a really weak move for a power earnings gap. ALGN is one that really, I've been watching it for a while. Busted out of a base. You can see this base here, and you want to see them breaking out of bases, not just out of thin air. This is a stage 2 base. And it was up, yeah, that's a nice move, 13% with 378% above average daily volume, but it did close in the lower quadrant of its daily range, which is kind of a bummer for me, but we'll give it a chance and keep monitoring it. You want to see those things with the hammer candle, at the high of the day, but, due to circumstances, it's the market weakness. This is Meta. This one closed at the low and 12% of its daily range. Still a 4% move. It was up what was the high today? 325. Yeah, not bad. Ended at 311. So that's you want to see, like I say, the hammer candles. NOA is my last one for earnings gaps for today. This one had a powerful move, up 31% with nearly 900% above average daily volume. It closed in the upper, 2/3 of its daily range at 70%. Definitely one to watch. You talk about thin. This one is 57. That is 57,000. That is a thin stock at 24. But I'm still going to monitor it. Oil and gas field services. So you never know where the big move might come. All right, that's it for today, except for I must acknowledge a couple of things. One is the large cap, stocks like Apple, Microsoft, Google, Meta. It's pretty obvious. Amazon, NVDA, these companies have the revenues and the resources to win the artificial intelligence battles. And so they're going to throw a lot of money at it, and they're going to, come out on top because these big fish, and NVIDIA is at the hub of it. These big fish have the money to win the race, and so smaller stocks are going to get squashed, and that's just the way it is in business. And I just wanted to point that out. Meta had this big move, Google, so I don't know if you like them or not. I talk about it, make fun of the big seven, but they do have the resources to win that race. So I just wanted to point that out. And the last thing, in honor of Steve Jobs, one more thing is CROX. Oh boy. They lowered forward guidance again, and this is becoming a serial gapper down, traded down to this low here. You fool me once, shame on you. Fool me twice, shame on me. If you're heavy into this after this move, you can't do it. You got to stay away from this thing until it proves itself, right? Until it proves itself. And now it's got a character of, selling off on higher volume. So that is a character change for CROX. Their problem is, hey, dude, their CROX brand is doing great. They're doing well in China. They're really killing it, and making a big push in China. But hey, dude has manufacturing issues. I don't want to get into the weeds on the conference call. I could just say that the CEO is very effusive and confident about CROX, but hey, dude, not so much. And they bought this thing just a little over a year ago, and it's like, you rescue a dog from the dog pound, and you need some training, so hey, dude needs some dog training, and they'll figure it out. They'll work things out. The demand is not the issue. It's got big demand, but the some of the manufacturers were taking it and selling them on Amazon, and it's just a mess. They have to clean up a lot of stuff, and it's going to take time. So stay away from the CROX. I mean, they do, you could just take a look at the numbers here with 61, 34, and 11% sales growth. So decelerating sales growth, as well as now they're below 20% earnings growth. They've still earned like $6.20 already this year, and they raised guidance to $12 and something. $12 in earnings, but they just, it's how they get there is their problem. And with a $6 billion market cap and 4.1 billion in earnings, it's I don't know, 1.5 times sales, but they have some issues to work out. I am going to, watch it and see if it hangs out there around 100 and see if it finds support there, but you got to stay away from this thing for now. The CROC is avoid for now. Anyway, that's it for today. Thanks for watching. Tomorrow's another day. Lots of earnings coming in. It's exciting times. Don't worry about a little pullback here and there. We want to embrace those pullbacks. Watch for stocks with relative strength. You can see them. They stick out like sore thumbs on days like today when the index is down. I'm just pointing out a couple here that I might like. Anyway, we never give up.